Hi everyone, welcome. Good morning, good evening, and also the good afternoon to you, wherever, whichever part of the world you're in. Well, I'm over here in Singapore, so it's a good afternoon. So today's session will be the live trading session, market analysis session, together with me, your presenter for today, Isaac. All right, and before I begin, I've already done a pre-sound check to this, but I also want to know that you guys can hear me loud and clear, right? You can see me and you can also see the slides, all right? More importantly, able to see the chart. Okay, hi Travis, all right, great to see your name, great to have you back. Hi David, good afternoon, evening to you as well, right? Thanks. Okay, so everything's good. You guys can hear me loud and clear, that's fantastic. So let me start with a very quick, simple disclaimer. Understand that the information contained in this material is intended for general advice only. So it does not take into account your investment objectives, financial situation, or particular needs. Now, FP Markets has made every effort to ensure the accuracy of the information as at the date of publication, but it does not give any warranty or representation as to the accuracy, reliability, or completeness of information contained in this presentation. However, it is my due diligence, is my prerogative as the presenter to ensure that whatever I present today is accurate at time of presentation. So information contained here is really for educational purposes and informational purposes only. All right. And with that, let's begin. I will have to ask for your understanding and forgiveness if I sound a bit off today because I have a bit of a blocked nose and my throat is a bit hoarse. All right, but no worries. Okay, it's got nothing to do with COVID, right? It's just a bit under the weather. Okay, so Singapore weather here right now is really humid and every day is like hot, and then suddenly at night it just there's a thunder. There will be a huge thunderstorm, that kind of thing. So it's quite crazy. All right, now for those of you who know me and have been attending, okay, hi Marifa, yes, that's right. All right, hi, good to have you. First time seeing your name, so good to have you here. Hi Rob, hi Philip. Okay, so yes, I recognize Philip's name as well. Right, so for those of you who are regulars, you guys would know that I like to keep things during my webinars a bit more interactive. Okay, so there will be no question. For those of you who are new, there's no Q&A at the end. Do not wait until the end to ask your questions. All right, the moment you have a question, feel free to ask. When the time is right, I will get to it. If there are multiple questions that are the same, I will group them together and reply them. All right, and this is really the agenda for today. So what I'll be covering is I'll give you guys a bit of a fundamental view of the market, so just a broad-based market overview, and then we will go into looking and identifying the key risk sentiment, right? The risk sentiment for the upcoming week ahead. And then I will share with you guys what I think are some of the best plays for the day. And then finally, I will wrap everything up in a nice, sweet and short summary. And hopefully you guys get to take away something today. Okay? So very quickly, just some interesting news to share with you guys from a very fundamental perspective. As you guys, I'm not sure how many of you actually trade stocks over here or actually look at a stock index, but that is actually a very strong barometer of the market. So understand that Asian stocks today rose and opened higher at the start of the trading session following the S&P equities rebound last night, right? As concerns over the Federal Reserve's hawkish stance has been tempered by the prospect that policy tightening would be gradual. Now over here, the reports are saying that it's gradual, but really at the end of the day, Jerome Powell has come to say that they are looking to tighten the interest rate and start to look at the tapering sometime as early as 2023. Now 2023 may be 1.5 years away for us, but really in terms of monetary policy, right, it is pretty short term. Okay, so by understanding, by traditional academic understanding, monetary policy is anywhere within 1 to 5 years, right? And then the fiscal policy, you're looking at something longer, 10, 20 years ahead. Okay, so monetary policy is really more to do with the central banks, whereas fiscal policy is more to do with the governments. Okay, so later, if there's time, I'll actually be looking at the S&P 500 equity futures, which is the E-minis, right? So futures always has a pre-market, so I like to look at a pre-market to give a sort of a indication as to where the markets would be heading after that. All right, during the US session open. So S&P 500 contracts, the futures contracts actually edged up earlier, right, after the index rallied overnight, aided by the revival of value trade in sectors like energy and financials. So if you're to look at a sectoral rotation, right, traditional sectors like energy and financials actually push the S&P higher. So it wasn't really led by the tech stocks, but more of energy and financials, the more traditional sectors in the market. Okay, European equity futures were also in the green. So really the stock indices globally was really just trudging forward, moving higher and pushing higher. However, on the flip side, okay, yields on longer dated treasuries rebounded in the US session, but short end rates, so we're looking at a 2 and 5 year, they actually remain steady. Rates were relatively unchanged. Okay, it's a bit interesting because right now is really the fundamental focus is really on the inflation story. So we will take a look at the rates later as well. Over in the commodity side, right, we have Brent crude oil actually pushing higher and hitting $75 a barrel overnight. Okay, this is the first time in more than 2 years, especially after last year's crazy drop where the oil futures actually went negative, right? I'm sure some of you have remembered that. Okay, and this comes as the signs of a rapidly tightening market. However, if you ask me, there is very limited in terms of a technical picture. There is very limited upside now for oil. The run is sort of exhaustive for me. My personal target would really be $77 per barrel. If I have to be very precise, it's actually $77 per barrel, but I'm going to give a range is somewhere from $77 to $80 per barrel on oil. All right, so that's referring to Brent crude oil, the one that's more actively traded. The one that you always hear about in the news is usually more to do with WTI oil. Okay, so that is the story for oil. So oil pushed higher. Okay, at the same time, gold prices also soared, right? So gold prices actually advanced for the second day as Fed Chair Jerome Powell continued to reiterate that higher inflation would really only be transitory. So while inflation has picked up slightly, okay, and is really long-term supposed to approach the central bank's headline inflation target of 2%, all right, Jerome Powell and his committee has constantly reiterated the fact from the start of 2021 that the inflation story here, the climb in inflation is really transitory. There's nothing much to fear. All right, so this is in the written remarks that he actually prepared for his testimony before the House Select Subcommittee on the Coronavirus Crisis. Okay, so I think what's interesting is investors really are going to be watching the potential questions that will be fielded, right, during his questions and answers. So gold prices took a bounce, right, and then you have institutions like Morgan Stanley and Goldman and even certain brokers that are also saying that, you know, they see slightly more upside for gold. Okay, however, this upside is also limited as well, right? I share the same view with them because I will share with you guys later on the charts that gold is at a monthly key level for me. Okay, so very beautiful picture, technical analysis wise. If you guys have been following me since a couple of months ago, right, you guys would actually also get a pretty nice move on gold as well, right? I'm not saying I'm like the Oracle of Omaha, or I'm like some sort of fortune teller, but I'm just saying that when technical analysis works, it works very, very beautifully, and there's no denying that it really does work. Of course, some of you might argue then that there's a bit of a confirmation bias there, which, you know, I would not deny. Okay, so okay, Zahid is saying that he cannot hear me, right? Yeah, he just sent the message in, he cannot hear me. Can you guys hear me? If you guys can, I'll just tell Zahid to quickly log out and log back in, because then the issue is over at his end. Okay, you guys can hear. Okay, thanks a lot. So give me a moment. Let me reply Zahid. Okay, so I've sent to him. Okay, so we have a few questions. One question from Michelle. She has actually asked. Oh, hi Michelle. Right, recognize your name. Right. You don't think oil price will surge up as high as $100? The supply for the coming few years are low, though, as no major investments happen in the past few years. Okay, I'm not sure about major investments that are happening in the oil market, Michelle, because I am not particularly in the oil sector. While I do follow news related to oil, I'm not in the oil sector. So if you're in the oil sector, then that is an interesting point of view. However, just from my understanding, right, talking to my friends in the institutions, having regular discussions with fellow technical analysts and even fundamental analysts, right? The story on the fundamental side, now the big thing is really ESG, right? Environmental investing, okay, green investing, all right. When you look at private banks, right? Private banks are starting to pitch that idea of building a long-lasting legacy, right? Is accumulating wealth is not about just accumulating wealth for yourself to enjoy. It's about living a long-lasting legacy for your future generations to come, right? Like the tagline of Patek Philippe, the watch is, you never truly own a Patek. It's you're only taking care of it for the next generation. So while there's all this kind of warm, heartwarming feeling about ESG, right? They are starting to see a bit. That is the swing that the investors are going towards, right? So oil, even Saudi Arabia, the biggest country in OPEC, right? The de facto leader of the OPEC group, is also starting to move towards ESG investing, and they are less focused on oil as they were over the last couple of decades. All right, so perhaps you're right, there are no major investments happening in oil. Why I think that oil is having a limited upside is because there is the Iran and the US nuclear trade deals, that the trade talk, right? The nuclear talk that is ongoing. Sorry. So it's ongoing, but it has taken a pause. And when it will resume, nobody knows, because Iran just elected a new leader, and they are saying that this new leader is a hardliner that will put his feet down. So we may see sanctions still being implemented against Iran. However, over the last couple of months, there has been progress that's been made between the Biden administration and Iran. So if that does happen, we will see Iranian oil, all right, there could be sanctions that will be lifted. We could see Iranian oil actually come back into the market. All right, so for that reason, with a flood of Iranian oil, I'm thinking the limited push for oil could only be up to the $77-80 per barrel. Now, beyond that is a bit too far for me to forecast. I would say to a better degree of accuracy. So I'm not going to say that oil is going to hit 100, right? It could be possible, but right now, at least in the next 1 to 3 months, I'm thinking oil price would fluctuate somewhere around 77 to 80. Okay, but Michelle, stick around, right? As we do the live analysis over time, maybe I'll revise my view again. Okay, so I hope that answers your question. All right, Christopher, you're saying that you're short spot gold from 1895 on the weekly. Do I see any correlation between gold and oil? Okay, all right, do I see any correlation between gold and oil? Okay, traditionally, there is no correlation. There's always correlation, right? Let me correct that. Traditionally, the correlation between gold and oil is more towards the negative correlation side. What that means is that, when oil prices go up, gold prices should go down. Okay, the idea is that oil is more of a risk-on kind of an asset class, right? So when the economy is doing very well, when people are bullish, right, oil prices tend to increase. People tend to put less money into gold, because gold is seen like an inflation hedge, and the prices actually climb very steadily, very slowly, right? So gold price and oil price, they are more towards the negative correlated side than the positive correlation side. Now, however, recently, gold prices has gone up over the past 2 days, right? Oil prices has also been on a very strong bullish push over the last couple of months. Why is that so? For me, the story here is the dollar, right? Right now, the dollar and the inflation story is taking anchor. So investors are keeping their eye on that. And because of the inflation story, that is why people tend to play a bit more with gold, right? Gold, like I mentioned just a couple of minutes earlier, is really seen as an inflation hedge. Okay, its value doesn't erode quickly over time, neither does its value climb very fast over time. Okay, so Christopher, I hope that answers your question. I will quickly later towards the end, if there's time, all right, I will actually be going through the gold chart. Okay, David, you're also saying if oil supply diminishes but demand is still high, higher oil price. Yeah, you're right. So oil is actually a commodity that I feel you need to understand. You need to have good graphs of the fundamentals, and you need to have good graphs of the technicals in order to trade oil well. Because oil well, you get it? Oil wells. Okay, never mind. Cold joke, right? Cold joke. Singapore's weather is too hot, so I need something cold. So anyway, you need a good graphs of fundamentals and technicals in order to trade oil properly, right? Technicals alone is going to get you whacked really badly. So is fundamentals alone, right? Because oil is very susceptible to fundamental play, right? One fine day you have a missile attack somewhere, that's it with oil price. One fine day you have a bunch of hackers that hack an oil refinery, that's it, right? So it fluctuates like crazy, okay? So you also need the technicals to help you identify the key levels for support and resistances, so on and so forth. All right, so for those of you who trade commodities, back to fundamentals, precious metal investors will actually be monitoring Powell's testimony for clues on when and how the Federal Reserve could actually continue to reduce its massive stimulus for the economy. All right, so like I said, some of the institutions are saying that the current bounce in gold is more related to technical factors. And for me, I'm saying that the bounce in gold is really limited, very limited upside in terms of commodities, at least for the next 1 to 3 weeks or so. Okay, may happen faster, may happen slower, but limited upside. I am leaning more towards that of a pullback that's going to happen soon. Okay, so but that is my own personal view. All right, so please again form your own views. If it coincides with mine, fantastic. If it doesn't, fantastic as well. Okay, stick to your view, have your own convictions. All right, Teresa, you're asking, does this come with a cert? I'm not sure what kind of cert you are actually looking for, but yeah, maybe when you expand a bit more on your question, I will get back to that. Okay, so that's the story of gold, right? That's the commodity story on oil and gold. Okay, so over here on the slides, right? I actually deviated a bit from the slides. I'm so sorry, guys. Too excited. Right, okay, so over here on the slides, back to the S&P, right? The S&P surge comes with the largest share of members advancing since April. As mentioned earlier, is really due to the traditional sectors like energy and financials, okay, that push the S&P higher. All right, and over on the next slide, why is it not moving? Okay, over on the next slide, I actually did a very quick week-on-week comparison. That's why the graph looks so short and so small. All right, the red line is the Dow Jones Industrial Average. The blue line is the S&P, and of course, the purple line is the Nasdaq, followed by one of the biggest Asian market. We have the orange line, which is the Hang Seng. Okay, so this is just to give across the global index, the global indices view, right? We see that really the Dow Jones Industrial Average that is the one from last week till now that after the dip, right? Last week till now, the Dow Jones, the DJI, is the one that really climbed the quickest. Okay, it climbed the quickest. Though still underperforming, but it climbed the quickest. And then of course we have the Nasdaq, the purple line, which is relatively flat. So the technology sector, right, is sort of holding steady. Okay, sort of holding steady. right? And then of course the S&P, which takes into account the 500 biggest firms in the US, can be from the Dow, can be from the Nasdaq, right? Took the middle line. So it's very obvious, very straightforward. Okay, the climb in the S&P is really led more by the Dow Jones components rather than the Nasdaq side of things, seeing how flat the Nasdaq is. So of course, of all the US indices, the one that outperformed is still the Nasdaq, followed by the S&P, and then finally the Dow Jones. Okay, and over in Asia, all right, Hang Seng has held relatively steady, but week on week it also has dipped a bit and slightly underperformed against the Nasdaq and the S&P, right? However, it's still generally holding steady. Okay, for the Hang Seng is a bit more special. It's because it's really political, right? There is this whole issue with China, one country, two systems sort of thing. But as recent as I think yesterday, right, Apple Daily, the most pro-democracy newspaper in Hong Kong, has actually had their assets seized. In this move, right, spectators and political observers are actually saying that, I saw this meme, right? If you guys are fans of Star Wars, you guys will remember Senator Amidala actually standing with the Chancellor in front of the international in front of the intergalactic courts, and they were all clapping for whatever the Chancellor was saying. And then Senator Amidala actually said, and this is how democracy dies, with thunderous applause, right? I'm a bit of a Star Wars geek myself. So some people were actually saying, this is how democracy dies, with Apple Daily's assets being seized. Okay, so of course the Hang Seng stock index took a bit of a hit, right? That's why you see that dip. All right, so that kind of rhymes. Okay, so with that, all right, I want to move on, okay, to another big story, which will be also interesting for all of you. And the big story is really that of cryptocurrency. Okay, so as you guys will know, very painful for those of you who went long. I can identify that, not because I trade in crypto, right? But the fact is that my own cousin is also lost quite a bit of money over on the crypto side, and he was actually asking me. That was when he started wanting to learn technical analysis. Okay, so Bitcoin slide towards 30,000 continued, right, overnight, as China's continued cryptocurrency crackdown is stoking fears of a deeper sell-off. All right, so China's regulatory body, the PBOC, has actually called Ant Financial, Tencent, and all that to warn them again about accepting payments in cryptocurrency. So Bitcoin fell as much as 4.3% at the start of the trading day, all right, and was trading at about 32,240 early on this morning. All right, second ranked Ethereum also slipped by around 4.2%. Okay, and we start to see that the cryptocurrency sector is really under pressure. All right, so fundamentally speaking, I want to show you guys a picture. All right, fundamentally speaking, give me a moment. I'm just taking this from Bloomberg. Not sure if you guys can see this. Okay, yeah, anyway. Okay, so fundamentally speaking, people are actually watching the 30,000 level on Bitcoin. All right, so you have Bitcoins taken from Bloomberg. Bitcoin's plunged towards 30,000, pushes it to the low end of the recent range, right? So Bitcoin is definitely within a range right now, and fundamentally 30,000 is the psychological level for Bitcoin to break. Okay, so when it breaks, when it closes below 30,000, I think you're gonna see the crypto market vomit all over the place. All right, and Dogecoin, of course, that meme coin, has fallen the most, right? Again, very interesting. I'll share with you guys, Michael Burry. If you guys actually follow Michael Burry, he is one of I wouldn't say my idol, right? But he's somebody that I really respect. Okay, he has called the Big Short. The movie was part of it was actually due to him, right? He actually called the shot on Tesla, back in December, right? And then he called the shot on crypto. He even called the shot on the meme stocks like AMC, GameStop, Palantir, right? And people actually went, if you guys actually surf Reddit, right? People actually went to look at his SEC filings, and they found out that he really put his money where his mouth is, and he really actually went short all these things, right? And I mean, he's probably making a killing right now. So his latest warning is that, you know, history will repeat itself. The market is going to crash, and this time it's going to be worse. The crash is going to be losses, in huge losses, and some of these losses can even mirror the GDP of certain small countries. So if you follow his Twitter, right, it's a very doom and gloom kind of message, very cryptic kind of message. For me, I will follow technicals. All right, so let's explore that towards the end later. Okay, but having said that, when Michael Burry says something, I will definitely listen properly to it, because this is one guy who has been through the market cycles like crazy, and he's one guy who has actually called it very accurately and very consistently. So he's accurate and consistent, which is the two things which I think is very hard to find in people out there. Okay, so yeah, Daniel, you're right. Michael Burry, right? He is the guy of The Big Short. In the movie, his character was played by Christian Bale. Real life, pardon me for saying this, he's not as handsome as Christian Bale. All right, I don't think I'm as handsome as Christian Bale anyway. Okay, so the guy with the eye. Okay. Okay, so Christopher, you're asking a question. Could I have identified that crypto was a bit too toppy on technicals? Actually, if you have followed me, right, back in April, I was already saying that Bitcoin is going to crash. Okay, so that is I will show you guys how I actually managed to get that on Bitcoin chart later on. Okay, so technicals do work. All right, guys, technicals do work. Okay, so yeah, I'm not sure whether he lost his eye as a kid, Daniel, right? So I'm not too sure about that, but it is what it is. Okay, so yeah, I think it's quite painful, especially for this guy called Michael Saylor. For those of you who are a bit crazy on cryptocurrency, right? Michael Saylor has, over the past years, right, he's been so bullish on cryptocurrency. He's saying that this is the most dependable store of value that you can ever find today, right? And now over the last couple of weeks, right, crypto price has been plunging lower and lower. I'm sure his ego will be a bit bruised. Okay, but I don't believe in kicking a man when he's down, because in terms of technicals, in the past I have made many calls to my clients saying that prices will go up, prices will go down, but then when it didn't happen, you know, they'll tell me, you know, Isaac, what are you saying? And nearly almost immediately after that, prices move in the direction, right? So technical analysis also does help a bit in terms of market timing as well. It's really the time frame that you're looking at. So when people tell me they subscribe to Signal Group, I always tell them, do you know what time the person that's giving the signal, what time frame he or she is trading on? If you don't, most likely you're not going to make money. All right, so that's a separate topic. Okay, so to sum up the entire fundamental story, I want to leave some time for the charts. Okay, I don't want to do too much storytelling. Okay, S&P, right? Very bullish. The indices are very bullish. All right, and then of course you have commodities. For me, still bullish but very limited upside, waiting for a pullback on commodities as well. And then of course you have cryptocurrency, which is bearish. Fundamentally looking at the 30,000 level, technically the level is slightly higher, so now it's about timing to see whether technicals versus fundamentals is correct. All right, and then I'll quickly run through the charts to look at the risk sentiment for the week ahead, and then let's dive into the best setups. All right, don't really want to waste too much time. Okay, so I'm going to speed up a bit. Christopher, another question. Do I know how many retail traders own or trade crypto versus the institutions? If it's mainly retail, then for you it's total betting. All right, like I said, I don't particularly invest in crypto, so I don't really watch who the whales are and all that. But couple of I think sometime last week, I actually came across this picture on a forum where, you know, people were actually coming together to trade against a crypto whale just to make him or her lose the portfolio value, right? So still a lot of manipulations in the market. Okay, recently I think who's the guy, that Shark Tank dude, I cannot remember his name, okay, the Shark Tank guy, Mark Cuban, right? He also lost a lot of money, right? Lost his money on crypto, and then he came out crying saying, hey, you know, guys, this has to be regulated. Okay, so until proper regulations comes into the crypto market, I think it's going to be, it's still a gambling game for me. All right, so no offense to you guys who really have this long-term view on crypto. All right, this is just my own personal view. Okay, so let's go to the charts. On the left, I have the S&P futures. So I just want to look at the futures right now. Monthly, like I said, we are making all-time high. Okay, so monthly chart, nothing to look at. Let's go to weekly. Okay, weekly, a bit tricky right now. We are actually in a sideways range. So no matter how bullish people are calling for the markets to be, the fact remains that we are within a sideways range. And for me, from a technical perspective, whenever price is in a sideways range consolidation, it means that a breakout is going to happen. Now, it can mean a bullish breakout or a bearish breakout, right? So over here, it seems a bit toppish. All right, it seems a bit toppish. You change to line chart, it looks like, you know, price could very well be forming a triple. Why is it always white? A triple top pattern. Okay, so got to be careful. Definitely still in a range. If I were to take a retracement from this low to where price currently is, what I'm taking from here is because this was another range that price was in, and then you see it broke out to the upside, right? So I can actually do a Fibonacci retracement of the low to the high, open all Fibonacci ratios, and you'll see that it's still holding above the 23.6%. Okay, so not to worry. Only for me, I will only confirm my bearish bias, right, if the S&P actually breaks and closes below this 23% retracement, which is the 40-29, 40-29, 40-30 level. Okay, and on the daily, I want you guys to see that on the daily, why this 40-39 level is important is because if I were to draw a trend line connecting the lows, right, we are still relatively holding above an ascending trend line support. Long-term indicators are bullish as well. So I know that Michael Burry has saying that, you know, there's going to be a crash. For me, the first warning that I'm watching out for is when the S&P actually breaks below this trend line. When it breaks below this trend line, it closes below, I want to see a rejection. This will be my first big signal that there's going to be a deeper drop in the market. All right, and then once this happens, okay, I want to see another close below this. Then for me, it's relatively certain that, you know, we're really in something deep. All right, so that is what I see for the S&P. All right, so March low, March over here, right? I guess, Christopher, you're asking me for the March low, doing a retracement from here, low to high. All right, you can see that, you know, price has tested 23.6, not yet broken below yet. Okay, so Daniel, you're saying that it needs a correction over 20% to say that it's a bearish market. I beg to differ. Okay, we are talking about index right here. Okay, if you're talking about stocks, major stocks, and you're looking at anywhere from 12% to 20%, then yeah, you're correct. However, if an index, for me, if an index drops anywhere from 8% to 12%, that for me is a bloodbath. Okay, so a drop, okay, from, let's say if price were to break this trend line, okay, let's say if price were to break this trend lines, let's just take the 23.6%, a drop to over here. All right, you have a 3.38%, but from where, so this is really quite a significant drop from where price currently is. It's still about 5.5%. Okay, so when it comes to index, when we are looking at indices, okay, anywhere from 8 to 15% for me is considered a bearish market. It's considered a very big drop. All right, for index. But for stocks, okay, 8 to 12% is okay, right? And 12 to 20%, yeah, that for me is I start flashing the warning signals in my mind already. Okay, so yeah, Daniel, yeah, when the index drops over 10%, there'll be a few guys selling their wives. Either that or their wives are probably going to kick them out of the house. Or if their wives are the one trading, the wives will probably put the husband up as collateral, right? It works both ways. Okay. All right. So very quickly, that is the S&P. Okay, that is the S&P. Let me just move on to the US 10-year yields. Okay, we're going to look at the US 10-year yields, the interest rate. Okay, so no point looking at the weekly. All right, no point really looking at the weekly. The weekly is just very interesting. All right, that we are actually, if we do a retracement from this last high to this low, we are actually flirting around 78.60, even tested the 88% level. Okay, but I want to show you guys the daily. Okay, the daily, just to look over here, the Federal Reserve is saying this transitory. They could be right, but you know, in things like that, you never really know for sure. Okay, so in terms of structure, the yield prices has been making lower highs and lower lows. Okay, so what I'm expecting price to do is actually come up to test this same high and actually push down, make a lower low. All right, and if I were to do a retracement on the yield, okay, this area is around the 61.8 region. Okay, yields could actually be pushing up towards the 1.59, 1.6 level again, but not a cause for concern because we are still kept below this descending trend line. All right, it may drop down to this last swing low over here. After that, these are the key levels that I'm looking at. Okay, and then of course, if I were to do a retracement of the entire move from the low, where it's been climbing since August last year, you can see the 50% level actually lining up with the negative 61.8, and it's also near this graphical support level. Okay, so there's a bit of a confluence here, right? It may push up to this level, and then after that, it just comes down over here. Okay, but this is a bit too far away. This will probably take a couple of months because we are on the daily chart. Okay, so for the next 1 to 3 weeks, I'm thinking we could possibly see price, the interest rate actually push up to around the 1.6 region, and then after that come back down to the 1.35 level. All right, so this is just some levels to look at. And very quickly, let's move over to the dollar index. So if you guys remember, right, the dollar index, I was saying that we should see a drop down to the last swing low and then a breakout above the descending trend line. It would go a lot higher, right? So the dollar index really did rise. Okay, I want to show you guys on the daily, if you don't draw a trend line from this high, hey, try to touch as many candles as possible without cutting the candle body. Okay, and do a retracement from this last high to low. All right, you have the 78.60 over here before this gap. So we have a resistance around this level here, which is in line with the descending trend line resistance at a 92.5740 level. Okay, the 92.5740 level. So I'm expecting the dollar to strengthen a bit more, push up. Okay, sort of a last push, strengthen a bit more, and then after that, probably tank to the 61.8. Okay, so I'm really projecting a bit further over the next 1 to 3 months. Okay, but for now, over the course of this week, we should see the dollar actually extending higher, right? At least to the 78.6 region. So if the dollar is going to extend a bit higher, like I said, that will make commodities priced in dollar a bit less attractive. So we should see a short-term pullback on oil. We should see a short-term pullback on gold. Okay, so the dollar for me is slightly bullish. And last but not least, let's look at the VIX. Okay, so VIX, like I said, always watching this 26 level. On the daily, however, we are back in a range at the 1795 level. So volatility, not much in the markets. Fear, not much in the markets. My sense right now is that, you know, a lot of people are sitting on the sidelines, probably just doing what they're still doing. Okay, looking over at the crypto side of things. Okay, and probably also looking a bit more at the stock index and just doing their value play over there, right? Because the stock index is just climbing. You close your eyes and you just put in the money. Momentum ideally is supposed to carry your prices higher, but like I said, warning sign, S&P is a bit toppish. Okay, so to put everything together, I just want to sum it up quickly for you guys. Then we got some comfortable time to actually look at charts. So S&P for me is bullish, but 1 star because it's more topish. Okay, still bullish long term because of momentum, but really topish pattern. All right, and then after the US 10-year yields, okay, short term we're expecting a push up as well, so bullish also, but this is 2 star. I expect to see a nicer push up to the descending trend line resistance. The dollar index, very limited push up, so it's bullish 1 star, very limited push up. And then finally the VIX, okay, not much change. I would say it's mixed. Let me make this bigger so it's easy for you guys to see. Okay, so at the end of the day, right, the risk sentiment that we have in the market, okay, is really one that is, I would for me, it will be a bit more risk on. All right, on the whole, slightly more risk on because we are bullish S&P, we are bullish dollar. All right, and the VIX, we don't really see any sign of fear. Okay, the eye is still on the US inflation story. Now the US 10-year yield, yes, bullish, but over the course of time, you should see it decline as well because the Federal Reserve has said that, you know, they're thinking it's more transitory than any other thing. Okay, so overall risk sentiment for the rest of this week, okay, slightly more risk on. All right, so I'll give it risk on 1 star. Okay, so this is our risk sentiment for this week. So with that, let's very quickly, okay, sorry, I want to leave this here and let's just go over to the charts. Okay, now I promised Christopher, I think, on Bitcoin. So could I have called the drop in Bitcoin based on technicals? Absolutely. Not on the monthly. The monthly is just a parabolic shape. For those of you who are trained or have a background in statistics, right, you know that this is starting to look a bit like a normal distribution. Now, there are people that are actually saying that, you know, normal distribution graph, you actually see it come back down. So if that's the case, it's going to be pretty painful, right? A normal distribution graph, right? But I'm not the least concerned about Bitcoin on the monthly. On the weekly, okay, it's a bit clearer. On the weekly, it's a bit clearer. On the daily, of course, makes it even more clearer. Now, on the weekly, I want to show you guys something a bit hard to see on the candlesticks chart, but it's easier to see on the line chart. Okay, there's a topish pattern being formed over here, right? And some of you are going to be like, oh, come on, Isaac, what do you mean topish pattern? Just because you draw one line, you know, change to candlestick, you see it's been testing, and then it happened here. There's a big push up followed by a rejection for that week. Not to worry, if you were to look at RSI or even stochastics, okay, you look at RSI, all right, there was already a divergence forming earlier that started from here, right? The divergence actually started from here. Okay, let me just change the line color to something that's easier to see. Okay, the divergence started from here and then it continued over here, right? And then after that, you can see that the divergence still continues. Okay, so this is where the market is starting to warn you already that, hey, you know, there's a bit of a divergence. Now, Warren Buffett has said the markets can remain divergent longer than you can remain solvent. So some of you are going to say, you know, Isaac, you're completely talking crap. All right, yeah, okay, let's overlay the stochastics. Stochastics will probably show you divergence as well. Oh, sorry, give me a moment. Hey, why is it like that? Okay, so stochastics, let's look at 21. Let's just look at a slow stochastics. I generally don't look at others. Okay, even 21 might be a bit too far-fetched. Let's look at 13. Okay, so stochastics, also a slight divergence here, but stochastics happened a bit later. RSI happened a bit earlier. Okay, so stochastics called it over here, right? I'm just going to draw that line for you guys over here. Now, you know, back to it, some are actually saying, oh, you know, just because you see a divergence means it's going to drop. Actually, for me, no, right? I'm going to show you guys. There's a trend line breakout that I was actually watching. This was the trend line breakout that I was actually watching for. Yeah, I don't like this magnet mode. Okay, so in close, okay, in close, you can actually draw it slightly nicer, but candlestick works better for this. Okay. So for me, the telltale sign was when I had a break and a close below this ascending trend line support, right? So back in April, I was already telling my colleagues, you know, hey, crypto looks like it's going to puke. All right. So of course it puked. And then on the daily, you can actually time it even nicer, right? On daily, you can even time it nice. You can time it even nicer. You can forget about the divergence because the divergence was only seen on the weekly. All right, on daily, you can time it even nicer. A breakout, and then you can just do a pullback to around the 61 where your entry is, right? The 61.8 entry, and then you can just do a entry somewhere over here with your stop loss just outside of market structure, somewhere higher, and then your target can be negative 27, okay, or negative 61. You have two targets, and the risk reward is actually pretty sweet, right? Just saying possible. This was a possible trade idea as well. So risk reward in terms of swing trade, this was really, really nice. Okay, so some of you have questions. Okay, Daniel, looking at the Aussie against other currencies on the weekly, is there weakness in the Aussie? I will get to that shortly. Okay, Christopher, RSI, big picture and leads, stochastic shorter term, was there a crossover on the moving averages? Okay, generally I don't use moving averages, but if you want, okay, we can actually look at the moving averages. Okay, I'm not sure what's the timing that you use for moving average. Normally I'll use 21 and 13. Okay, so a bit more short term, a bit more sensitive. Okay, so yeah, on the moving average, there was a crossover sometime in April as well on the daily. Okay, so if you're looking at 250, blue is 200, let's try that. And red is 50. You're not going to get a crossover so fast. Okay, the crossover is only just starting to happen on the daily. All right, so Christopher, I hope that answers your question. Okay, I tend not to use moving averages unless absolutely necessary. Okay, so that's for crypto. All right, let's see. Okay, so Aussie, right? So let's look at Aussie against the dollar first. Okay, let's look at Aussie against the dollar first. Why Aussie against the dollar? It's really because, right, we already identified the dollar index, and I said that, you know, the dollar is actually the, what do you call that? The dollar is actually going to be slightly bullish. Okay. So on the Aussie side of things, all right, on a monthly, okay, this for me on the monthly, the Aussie looks like it is toppish over here. All right, we have a very strong bearish engulfing that's currently forming. If I'll do a retracement from the low to where the high is, the 61.8 is enclosed this graphical overlap here. So we do have a bit of room to go for the Aussie to drop against the dollar. Now, this could mean two things. One could mean that the Aussie is going to weaken. Another one, it could also mean the dollar is going to strengthen. So I'm hoping it's the latter story. Okay, very quickly, let's move down to the weekly. Okay, weekly, this is what we see. I wouldn't say it's a head and shoulders. I originally thought it was a head and shoulders. Very, very ugly. All right, looks more like a, I'm not sure what this pattern is. Okay, so anyway, nothing much for me on the weekly except it's also toppish. You see here, right? And whatever it is, it has broken below this neckline over here. I prefer to take it in close. All right, so we have the weekly resistance at 76.074 and long-term support at 73.76. All right, let's go down to the daily. Okay, in terms of market structure, right? Price has made a lower high and price is currently making lower low. So we can expect price to make another lower high before coming down to make a lower low. Okay, so if you connect all these lower highs together with a trend line from high to high, try to touch as many candles as possible without cutting the candle body and do a retracement of the last move from high to low, right? You're going to see that there's a bit of confluence. Okay, the negative 27 is lining up very nicely with our monthly key support level that we found on the monthly. All right, and at the same time we have the 38.2 as the first resistance around this zone here. I'm just going to draw a zone for you guys. This is definitely a resistance zone, and we have another resistance at a 61.8. Okay, so these are two very possible resistance for me. If I really want to go short on the Aussie dollar for swing trade, these are the two levels of entry that I'll look at, right? Why the 61.8 is strong? Because, you know, if price actually does drift back up, okay, it could be around this zone as well, in line with the descending trend line resistance. Okay, however, right now we are starting to see a bit of a mixed picture, not an issue. Let's go back down to the 4 hours. Okay, I can remove this trend line because it's cutting the candle body is something that's quite ugly. All right, I want to take a retracement of this last move, just be a bit more accurate, high to low, and you can see that a 23.6 level is here, right? So a break, okay, this is where I will not chase the trade. Okay, remember, this is a zone on the daily. 23.6 is not broken yet, right? So price could very well just drop all the way down to our target, where I will not find any good risk reward, so I will not take this trade. Price could very well form a double bottom, all right, reverse, break above the 23, retest, go to the 38, and possibly even go to the 61. Okay, okay, no, Daniel, this level here is the 23.6%. Let me see whether I can I cannot make the numbers of the fit bigger. Okay, but this is the 23.6% right here. Okay, the first level of Fibonacci retracement. All right, so in this case, the level that I'll be watching out for Aussie dollar on the shorter term is, let me just make the numbers bigger. I think I can make the numbers bigger here for the scale. Okay, so 20. All right, okay, this is much better. Okay, so I'll be watching 75,462 as a resistance. All right, breaking above this, we'll see the Aussie dollar go all the way up, possibly to 76,074, and possibly even to 76,593, which I will then be more confident to take a short. All right, otherwise, breaking below the last swing low, breaking below this level at 74,780, 74,779. All right, price will drop all the way down to our monthly key level, our monthly support that we've identified, right? And these are really the key levels for me to watch. Okay, so if price breaks below the support, okay, I will enter. I think it's possible to enter with a small size trade, but again, no good risk reward, so got to be really careful right there. I would prefer to enter on pullbacks. Okay, another question from David. Okay, when you track, do you use monthly? Okay, I don't really understand your question, David. When I track, do I use monthly, or what do you mean by when I track? Okay, my analysis, if you guys realize, is always a top-down approach. I start with the biggest time frame, monthly, work my way down to weekly, then daily, then 4 hours, and sometimes even 1 hour. All right, and then I'll take a trade from either the 1 hour and the 4 hour. Okay, so I always believe it's better to trade in line with the bigger time frame, right? Because they always say the trend is your friend, right? The trend is your friend until it ends. Okay, and for me, I also believe don't miss the forest for the trees. Okay, so you don't want to just go for the one tree when you're in the midst of a forest. You want to know really where you're at. Okay, so this is for Aussie dollar. Let's take a look at the Aussie yen. Okay, after this, I still got one more chart. In the interest of time, let's start off with the monthly. So Aussie yen is very interesting in terms of market structure, right? It is forming a lower high, okay, with a bearish engulfing forming right now, but we cannot confirm that because we're not at the end of the month. But we can do our retracement from the high to the low, and we see the price is flirting around the 78.60 level. Let's go down to the weekly. Okay, on the weekly, I don't see anything except I'm just going to take a graphical level here, this spike, okay, because price tested it twice. I'm just going to use this as a graphical level, 85,452, and then I'm doing a retracement from this recent low to high, and we see that price once again is flirting around a 23.6 area. Okay, so a weekly close above this, it will say that this is a fake out. Otherwise, if it close below 23.6, I'm thinking the next level to look at will be the 38.20. Okay, and the 38.20 retracement, okay, is where we see a supply demand candle right here, a pause. you look to the left, that was where price also started its drop. Okay, and quickly let's go down to the daily now that we've identified the weekly resistance and support. Want to show you guys this. Okay, definitely bearish on the Aussie yen, so it looks like Aussie is across the board weak, right? You have a trend line breakout of this, right? And you see that price actually tested this level once, twice, came close another time. Okay, so it could be doing a trend line breakout retest, okay, and then a further drop. All right, so this is what I see for the Aussie yen. Let's do a retracement on the daily from the high to the low. Okay, and price is currently testing the 38.20, which if you look to the left as well is really a graphical overlap level. Okay, it's a graphical overlap level. So we have a support as well, which is this low here. Okay, so the daily range is a lot smaller. I'm going to remove it. The daily range is like that. Let's go down to the 4 hours. So the story with Aussie dollar and Aussie yen is about the same. Okay, you're starting to see a lot of key levels. I'm going to remove this trend line. Okay, I'm just going to do a retracement from this high instead of taking from all the way here. I'm just going to take from this high. Okay, so you see it's testing the 38.20. All right, so 38.20 resistance. I'm just going to keep the 61.8 there. 61.8, no real resistance. I'm thinking perhaps more 78.6. Yeah, 76.4. Okay, probably a zone. All right, so you have a resistance zone around here. All right, around here, but really this zone is quite wide. Okay, so again for Aussie yen, really levels to watch. All right, really levels to watch. Okay, break above 83,231 is going to go to this level, possibly even higher towards this level, but just short term first because this is on the 4 hours. Breaking below the last swing low will be 80.29. Sorry, 89.29. Okay, so levels to watch. Story for Aussie yen and Aussie dollar is the same, really levels to watch. Okay, so maybe here it could be Aussie that is a bit mixed. All right, so hope that answers your question. Okay, so we have a few more questions coming in. Okay, Christopher, thanks for explaining David's question. Right, it seems like I've answered his question. Okay, and then Chris, you're saying at the moment you only scalp on 5 minutes chart. Is it harder to trade on smaller time frames? Okay, for me, my own personal experience is that yes, it's harder for me to trade on smaller time frames because it gets very noisy. And every small news, right, you tend to see a lot of big movements around there. Okay, so I generally don't trade on anything lower than 1 hour, right? So but that's for me. Okay, so I have tried trading on a lower time frame. I have to be very honest, I'm not profitable. I've blown up the accounts that I always used to trade on the smaller time frame. But when I trade on a bigger time frame, right, I'm a bit more relaxed. My risk reward is better managed. Okay, I'm generally on the whole a lot more profitable. All right, I can be that honest with you guys. Okay, so Shabir, you're actually asking, can I please suggest a good time frame? Very tough because as a trader you need to know your style. All right, it's just like it's akin to, you know, people telling me, hey Isaac, can you recommend a good brand of shoes, right? So yeah, I would recommend Adidas. I would recommend Mizuno, because those for me shoes are very long lasting. However, you know, maybe I'm not as hyped as some people out there. My own brother actually prefers Nike and Converse, right? But then when I wear them, it looks really ugly on my fat feet, so I look more like a duck or somebody. Yeah, I look like Ronald McDonald really in his red shoes whenever I wear the Chucks or when I wear Puma shoes, right? So it doesn't really fit for me. So when you ask me, you know, what time frame is the best, you need to first identify for yourself what suits you as a trader, right? If you have time to sit in front of the screen, maybe the shorter term time frame will be better for you, right? However, if you're holding a full-time job, you're trading on the sidelines, maybe you don't want to trade on such a short time frame, you want to trade on the daily and the 4 hours, right? However, if you're a long-term investor, then you could be looking at a weekly and at a monthly. All right, so Shabir, I hope that answers your question. Okay, so let's take a look. Travis, a few of you are asking for NZD USD Kiwi dollar, so let's go over to that very quickly. Start off with the monthly. All right, on the monthly, it looks like we're forming a topish pattern again, a double top. All right, testing the neckline right there. So I'm going to take the closing price of the neckline as a confirmed level that once we break and close below, we're going to see it tank. Okay, sorry, back to Chris' question. How long do I expect my trades to last on a longer time frame? And is it doable with a smaller account size? Okay, so it is definitely doable with a smaller account size, but then it just means that your position, okay, your position management, your risk management, you have to be very strict on it. Okay, for me personally, yes, I have managed to flip a $100 account into a $500 account a couple of times, right? But then when I try flipping a $1,000 account, okay, you know, my psychology used to not be there, so I couldn't do it. But then when I was on a $1,000 account, you know, I had to slowly build my way up. It was more manageable, right? So it really depends on the mindset, the psychology of a trader as well. Okay, so personally, as a swing trader, I tend to hold my trade from anywhere from 1 to 4 weeks, right? So 4 weeks is normally when I'll just close off my trades, whether profitable or not. The longest I've ever held my trade for is 2 months, but that was really trying and really testing for me. Okay, again, there was small position size because I just wanted to test my mindset and see how I would react. Very uncomfortable. All right, so you need to be very in tune with yourself. Okay, so longer time frame, you expect your stop loss to be a bit wider, right? So your position size has to be smaller, your risk reward has to be a lot better as well. Personally, I don't take anything less than 1:2.5. Okay, so yeah, Chris, if currently scalping works for you, please stick to it. All right, please stick to it. Okay, so I'm not here to change you guys or anything. I'm just here for all of us to grow and get better together. So very quickly, let's go down to the weekly. We've already identified the weekly support, and you can see that, you know, price is flirting, testing around. Okay, and you can also see that on the weekly, very clear double top, strong preceding uptrend. Let's do a retracement from low all the way to high and open off Fibonacci ratios. All right, and you can see that right now is this zone, the 23.6 zone that price is currently in. All right, so I'm highlighting it blue for pivot area. Okay, a break below, for me, we'll see it drop all the way down to the 50%. Why I identified this 50% is really because there's a market structure right here. Okay, I like to see price moving in structures. Okay, so with a market structure here, price could very well enter this market structure here. Of course, there are two supports. The first graphical level is over here, so a very short-term drop. A longer, deeper drop will be to 50%. Okay, so just keep these levels in mind. All right, and then of course resistance, if we were to bounce back up, very clearly, very simply, it's just going to test the recent swing high. Okay, let's go down to the daily. So on the daily, market structure is telling us that price has made lower, okay, lower highs. Okay, it has made a low. This seems like a same low. So a break below, like I said, a break below will see a deeper drop. Okay, let's do a Fibonacci extension with 0.1, 0.2, 0.3, and open off Fibonacci ratios. And you can see the first level is not the 38% on the weekly, but it's actually a very strong graphical level on the weekly, and now on the daily is actually in line with 100%. Okay, so I will wait. If price actually comes down to this 100%, then the market structure is very clear. Lower highs, lower lows. We can expect price to make another lower high. It is from here that I will play a bounce. Okay, but for now, I'm just going to watch all these levels. Nothing much to see on the daily as well. I'll do a retracement of this last move just to see where the intraday levels will fall in. Okay, 50% is this level here. 50%, we have a very strong graphical overlap resistance. Okay, so 50%. You can see the negative 27 lining up with the 100% extension. So we have graphical, we have strong Fibonacci confluence level. This support at 67, 909 is a very strong support level. Okay, let's go down to the 4 hours. So 4 hours, nothing much to see. You can actually do a small retracement from this level, right? There's a consolidation over here. So you can do you can start your retracement from this high to this low. And you can see that price failed to break the 38, but clearly already broken the 23.6. Okay, so I will wait to see how price develops in this area. Whenever price is at a key area, okay, it actually tends to trade sideways a bit first. All right, so if in the microstructure on the 1 hour, okay, you're starting to see this, right? 1 hour, there's a small trend line here, a very small counter trend line. Okay, so if price makes another push up, makes a higher high, okay, I will enter on a higher low, right? And then I'll just play up to my resistance. Okay, the risk reward here on the 1 hour is actually pretty good. So I'll wait for a higher high first, and then I will probably enter back at where the trend line is. Possible entry with a possible stop loss just outside of market structure. And then after that, play a push up all the way to the daily take profit that we identified. All right, over here. Okay, so risk reward, very nice, very simple. Okay, however, again, the Kiwi is very correlated to the Aussie. So on the 4 hours, it looks very mixed right now. Okay, any pair against the US dollar right now, any majors against the US dollar is really quite mixed because the story is still on the inflation and the dollar story. Okay, so Christopher, you're right. Nicks back on technicals across the time frames, definitely a lot of patience and waiting for the trade to come to us at a lower risk setup. So yes, Christopher, completely agree with you. No point chasing the trade, just wait for it. Once price, okay, is at a key level, you can see it fluctuates quite a bit. All right, there will be opportunities to re-enter. You can see every time price tests the high, it fluctuates, it sticks around that level for a while before it drops. You see, it comes back to the same level again. Okay, so don't worry about it. There will be plenty of opportunities to trade. You just start worrying when you start losing money. All right, so with that, let me just head back to the slides. Okay, I just want to thank everyone for your time. Really appreciate your time spending your afternoon, your morning here with me. I hope I've managed to answer all the questions. If you have any feedback, right, please email support@fpmarkets.com. The staff will be very friendly. They are very friendly, right? They will get back to you ASAP. I know they are very quick on response. Okay, and for all upcoming trading webinars, you guys can actually go to fpmarkets.com/trading-webinars/ there you can register for all upcoming webinars. All right, so we have quite a great list of topics that are lined up for you guys. Okay, so I hope today's live market analysis, both the fundamentals, technicals picture put together very nicely for you guys. Trade safe, stay safe, and I'll catch you guys again. All right, take care and goodbye.